Okay, good morning. This is Simon with Trade and Perform Coaching. If you'll take a quick moment to read this legal disclaimer, past performance is not indicative of future results. You can lose your backside day trading futures, etc., etc., etc. Please consult an investment professional, which I am not, before ever risking any capital. Okay, so what we're going to do is review the longs and shorts yesterday from what I consider to be our best algo. Okay, so this is the auto trader version of that, and so what we are looking for, we'll do the longs first. So the longs totaled about $3,000 with gains and losses. Its peak was at about $4,000. So here's the trade that it is taking, Wednesday, Thursday. So here we go, right at 8:30. So you can see let's lower this. All I need to see is that little blue dot. So there. Okay, so you can see, so what it's looking for is a wave of 3, right? And then any combination of purple pink algo with one of our algos in between. So and I want it coming so that a point of control is outside the 4th channel, right, guys? So this is the first long of the day right there, and the scales are 20, 30, 60. Okay, so really that 60 is for your own discretion to come out, or you can let it try to hit it. If you did it untouched, your peak equity was about 4,200. You ended up with about 3,000 with stops and break evens and all that good stuff, and it moves to break even after 20. Okay, so if you go through that, channel, right, and you hold on one second. Okay, if you go through that channel, you'll see, so there's trade 1 wherever the blue dot is, right? So we can just skip through all the noise, and you'll see the computer never gets bored, and it never does it out of sequence. Again, outside the 4th channel, pink blue algo with the diamond and the star. We all know those mean different things, but we'll just go with it from there. That obviously got its 30-60, right? Now watch, it's going to wait patiently. It takes us, the algo's over here, came out of behind the 4th channel. I don't even think that got to 20. That was probably a full stop. Right there, you'll notice it came right at the beginning of New York lunch, but if you left it running, it took it, and that number that I gave you is in account of just running it all the way through the day. So here's your next trade. This trade's harder to explain, and I'm not going to go through it. This was not this trade, obviously. I'll explain it later because it's much more complex, but it's essentially the trap back in of that trade. Like that trade above told me that there was buyers available, therefore we take that next trade, and I don't have it. It just would take me an hour and a half to explain why it took that trade there, but this trade's actually more valuable than this trade. Okay, so it takes that trade long. It obviously gets its 20, 30, 60 on that. So the in-betweeners, right? Like this is the yellow dot stuffed. The yellow dot stuffed algo would have taken this trade, but it's another algo. It's valid, so the machine would have gone long here. It's just off another algo, right? Again, long here, and you can see how it doesn't do. Like the interesting thing to me about this is, like I would never go long this. Right? Even though I know that's a great algo right there, a great combination of algos, I would never go long there, and that computer just doesn't have the hesitation. It's either going to take the win or the loss. Okay, so it's coming through here. Okay, again, takes this algo. You can see it would have gotten stopped on, it probably got 20, it got at least 20, maybe 30, and then the balance is stopped on the move to break even. Here, okay, so then if you were still running at the end of the day, you took one stop, and then you got paid on the long. But I don't think, this is while the Fed chair was speaking, I don't think anybody in their right mind would have run it during that time. So really this would end up being your last trade if you even ran it there, like if everyone was waiting for the Fed chair to run. So that's kind of how the day shook out, right? And it's not a one-time thing, right? So look, this whole thing, I'll show you real quick, is repeatedly if you wait for that combo, and I'll go through the shorts in just a second. Here, I'll just go back to this Wednesday. So here's a place where you would have taken, if we go through the 8:30, right? So see when it gets into this choppy thing, so that's loss, back to back. So that's 2040, right? On the loss off the open. It just didn't lift, right? You can see we're already underneath the 200-day moving average, right? And it just, and you can see it took the two losses, didn't pick up the trade there. Again, over here, it takes the trade here. This actually survives, I believe. It doesn't break, so you get your 20 and break even, okay? And it would not, and let me tell you, it would not have taken this trade here because this trade never stopped out. It never got underneath. It never tagged the original stop. So that's just move and then break even. You're still down on the day. That 10-14 trade obviously is 20, 30, 60, gets you paid. Why didn't it take that? Oh, I know why I didn't take that. So then this is 20 move stop to break even. That's 20 stop at break even, and that's the end of the day anyway. So that's kind of what a flat day looks like, right? It would have gotten you back to flat. You just had to sit there and look at it. But and if you go to the prior day, Tuesday, right? So here's 8:30 in the morning. There's trade 1, that's stop at 20 points. There's trade 2, that's 20, 30, 60. It may not grab another trade for the rest of the day here. There's your next trade, 20, 30, 60. That one came over New York lunch. And that's the end of the day. Right, so now I'll show you. Let me put this back proper. Now here's yesterday's shorts. Okay, so here's 8:30, ding, 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 market shorts. So you got 20, 30, 60 right out of the gate, which was kind of cool. This did 4,000 on the short side. There's your next short, 20, 30, 60. And that was the end of your day, right? So what I'm trying to say to y'all is, right, so it's telling you, right, it's telling you where the best trades are, right, and it always looks like this, right? Now, it ain't perfect, and it's going to lose, but here's what the machine teaches you. Here, look, F5, I'll show you where it fails. So obviously all above the 200, when we're just grinding straight up on trend day up, you don't want it on in the first 2 hours, is the obvious answer to that question. So here we'll go to this day here. So let's see if we pay. Okay, so this is on Monday, and you can see it actually went trend up on us. And it's still, this catches 20, 30, stop break even. Doesn't catch it here, and then it catches it here. So you don't get the 20, so you're still in the trade. So this is about where it moves to break even. Let's see where 20 is. Let's see. You entered here. So was this 20 or not? That is 37 to 25. It is not. So you did not get stopped, right? So there's scale 1. You really need 3 bars down. Scale 1, so that's 20, 30, 60, right? And you can see it does a pretty good job. There's your next trade. That's 20, 30. I don't think it's 60. It got stop break even on balance. And you can, so I want to show you something. See how you can sit there and trade as a human and go, hey, I know this is a trend down day. There's other trades in there that we would take, right? But if you're looking for the best trade, See how you can just sit there all day long? Okay, so look at this sequence. This went stop. So first of all, imagine the agony. You're like, oh, so I don't run it in the last half hour, obviously, right? But you can see it would have been stopped, then it would have been 20, 30, and your balance got stopped, and that was after the close, right? So I don't run it in the last hour, certainly not the last half hour, okay, and for a reason, okay? And then there's some trades that the machine just won't pick up. Here, I'll show you one other day. I'm trying to show you a day where it just gets, where if it gets clobbered, it would be in a trend up situation. Okay, so here it got stopped, right? You got maybe your 20, maybe 1, 2, maybe 20. And this was either stop, break even, or full stop. But then it took the trade on the trap back in, and it's just not the way it's programmed. It's not traditional trap. But you can see. Let's see if it gave you your 20 before it stops you, or if it paid you out. Let's see. So it's 37. Again, didn't give you your 20. Retraced, did not stop you out, and you got your 20, 30, 60 off to the left. And you can see that's a pretty hard up environment, right? So the areas where it fails, or where we'll improve the algo going forward, and again, it's been a constant evolution now that we're beyond trying to figure out. We pretty much know what works on this, so now it's a matter of fine-tuning. So like here, maybe it gets hurt here. Perfect. Okay, this is where it would get hurt. This is a stop, right? No scale. And this is a stop, no scale. And so if you were looking how it did through the course of this day, so this is the 1st of last month. So here we are early in the morning. So first of all, you can see we opened up with an open drive lower, right? And you would think the shorts would work great, right? But if you look at this, it actually went, this got 1, 2, let's see if it got 20. It may have just missed that 20. We may need to bring that to 18. 24, 14, 09. So, Sean, if you're in the room, we need to adjust this first scale to like 17 points to make sure that if we catch this, it doesn't have to come to break even until 20, that's fine, but at least we catch off the first scale so it won't get stopped. This is an outright stop, so you're starting in the morning. Now, in fairness, this is on 10-1, and there was probably econ at 9 o'clock. Okay, and we haven't determined whether we should run it through econ or not. Okay, but places where this needs to improve is, see this pattern right here. We're working on adding this pattern where it's just on the 4th bar instead of the 3rd bar. Yeah, I will. I'll make the change. So that right there will be caught in future editions. So remember, that's going to take stops, and this is a day where you think like, hey, shorts have to be a layup, right? So here you get your 20, 30, you get your 20, I don't know if you get your 30. Man, you barely miss your 30. You know what we should probably do on this, so this doesn't happen, is we should probably bring in everything 3 points. So it goes 17, 22, 27, right? Because we're just missing those scales because everyone knows the key rotations, right? I'll make that adjustment. Again, here you're going to get not even 15 points. You're going to get stopped, just flat out stopped. You're going to get stopped there, and you're going to get stopped again. So if either side has a weakness on it, so this is a good example. If either side has a weakness on it, it's this. So now when you look at where it's taking these stops, right? So look at the pattern overall. We came in, right? We came in, we open drive lower, right? See how we impulse move up above here? Really what I would be saying at that point is, hey, that's an impulse move off the low. We're looking for the longs. So I would want my shorts to work in that situation, but I certainly wouldn't be shorting over here when we turn on this rip up, and that's where you'd have to turn off. That's where you'd have to turn off the short side of the trade. And then when you look at the long side of the trade, right, see how there's one adjustment that has to be made. So we wouldn't catch the long here, right? We would catch this long, I think, right here. We would catch this. And we might take a stop here, but it needs to adjust to take this long right over here. So some days are just going to work out where you hit your stop loss, and that's that. But most days when you go through this where we're just not rip-roaring one way or the other, it does just fine. So here I'll show you. If you look at the day before, so this is 9:30 on a Monday, right? You're paid here. Most days it behaves pretty well, right? But there are outlier days, and that's it. You don't get anything else, and hopefully you ended up with a long at the low. In this case, you didn't catch the long at the low either. There's just not a pattern there that I would have said, yeah, go to town on that, right? So, which is fine. It doesn't always have to catch. It doesn't always have to catch the pattern. This will get caught. Well, that's 9:15. That was a day where it just didn't catch, just didn't do anything, right? And then let's look at the day after. 10-2. Bell rings. You catch the short right out of the gate. There's your next short. That gets paid. And there's your next short that gets paid. So you have to look for the outliers, but there's not many, right? You just have to go, hey, this thing is ripping, turn off the shorts and leave it alone. Like, we have a pretty good idea of where the shorts will come in or where we're looking for the shorts, right? And that's overnight right there. So I don't think anyone's running it overnight. And then if you look at the next day, it goes through that whole rip up and doesn't catch a short all the way through there. So it's just finicky. Some days where you catch a bad series like that. Sean, why didn't that get caught? Because no algo in the middle? We need to probably adjust for that right there. Right, so it's not catching everything. That's on 10-3 at 9:53. We just need to look at it. Here, I'll grab a screenshot of it. Oh, yeah. You're right. It's the wave. Okay, catches the short and the trap back in there. Like most days that operate, you can just leave it blind, right? And if you want to make sure you don't get annihilated, run it with 21 micros and do 777 instead of 3 full contracts, and your day will look more balanced, right? And then this is the next day here. It really does its job pretty well. We're not at open yet. There's the open. Seeing that short right there against that 200, I would take that orange square down every time, but just the auto trader won't take it, right? But you can see it quits itself. It's not trying to grab everything, right? So here you'd hope that it would grab some longs in between here, but the point is it doesn't have to, right? Like if you go through this whole series of days, like if we just go to Monday over here, there's 11:17 catches the short, right? Like the win rate's really high on it. It just takes forever to set up, and that's on trend day. Catches that short, doesn't catch the trap back in, unfortunately. And it was right at the both of those were right at the close, so odds are no one would have taken it, right? And usually it catches a long or two on days like that, and then it gets really streaky sometimes. So that's would not have been taken because it's the open. There's a stop. There's stop and probably paid, but you had to recognize that we had gone trend up. See, we're above the 200 there. So you'll use your judgment. Like the way the shorts work is where it hangs up on top there and then just breaks to the downside move. But you can see it's not getting annihilated. Like in this case, it's not getting annihilated, and you would have picked up the long right there. At least theoretically, you would have picked up the long on trend up. on that setup. My other point is, when you're trying to get this trade, like see this is this is 3 in the morning, but that's a valid setup. The trap back end usually works. It's just getting the computer to recognize the one that you want, right? So, but what I'm trying to bring up is look how far in between it can go without catching. Like that's a great short right there, right? See how it goes to that consolidation and catches that short, but the machine's patient and it's not trying to grab every single trade. Right? It's not trying to make everything work. And what you realize is the really great trades, like this thing sometimes yields 200-point trades, up and down, right? Like let's see if we cut the low there. We'll adjust it so it catches this. Well, no, that's midnight. It won't ever catch that because I won't have it on. Here. So like that roll right there, it's the end of the day. You're not going to catch it. Let me show you. Okay, that's before 8:30, but here, this is after 8:30. It catches that roll. That's a 200-point roll right there. Like it really acquits itself really nicely. You just have to decide what your line in the sand is or reduce it. I would reduce it to plan for 4 stops in a row, right? 4 stops at 22 points and make sure you can handle that stop and then let it stretch when it pays you. Like this right here is what, and even here you escaped. Let's see. Don't run it the last half hour. Here's a stop. So this would have been stop and paid on the trap back in. Here's a place where you would have gotten. This is stop, stop. So 2 stops before 8:40, and then you catch a 100-point ripper to the downside, right? So I'm not saying it's perfect, right? I am not. I am saying it's very good, okay? And if you can size it correctly, right, and you put your proper scales on the trade, like I said, it's not trying to catch everything. And if you'll look, where it acquits itself is where we start driving straight up and it just doesn't get whacked, right? Like we start driving straight up through here. Like look, it catches the trade on the turn, but it doesn't catch any of this noise over here. So there will be some adjustment. Like this will end up getting, once I make the adjustment, this will get shorted and then this will get shorted as well. So that would pay for this at 908. And this long will get captured once we make adjustments, and I can back test it. I believe my supposition is correct, but then you have to put the pen to paper and go, okay, where do we want these trades? Like per example, this has gone trend day down, so this is stop retake. That's a 50 to 100 point roll, right? See how so we'll make a filter here. See how on the impulse move it takes this short, so this is a constant right here, and over the weekend we'll put a filter in so it doesn't take this first short because it always appears. So right now you just have to know that impulse move, you have to turn the shorts off, but then subsequent shorts tend to work after that if it'll set up, right? So there's your next short right there. So we have the filter, we just got to get it, we just got to play with it a little bit. This will not get taken, but this will right here. And oh, that's after close, sorry. So it doesn't get taken, right? And then if you go to Tuesday, like look, I'm just going day over day and I'm not having to make any excuses like, oh, it catches it or oh, it doesn't. Catches here, that's a stop, break even. Catches that gets paid. This will get adjusted so it takes it. And what the stop will probably be bigger on this, so it'll be run in a separate chart book so that the size gets cut to account for probably the larger stop that has to take place there. And you can see it's not firing wildly. It's really pretty conservative. So this entry gets stopped at 9:30, then this gets retaken for 100, right? You can see you're underneath the 200 there. So again, this is going to get stopped, right? And then this is going to break and give you the other 100 for the downside move, okay, or more. That was really beautiful trade there. So the question on that day is, did it take any longs in that process? And I think, if I see it correctly, so with the adjusted algo that I want to make, this long would get taken and stopped. This long would get taken and stopped. right? And then the trap back in hopefully would get taken, but I'm not sure of that. Whereas if I leave it just as it is right now with a more restrictive entry policy, it just doesn't take a long through there. And then you can see the next day the shorts acquit themselves. Most of the time the shorts acquit themselves. So what you got to, since you know there can be a wild feather in there, right? What you've got to do is you've got to adjust it so that, let's say, so this got stopped, this paid, this got stopped. Oh wait, did it? Maybe it didn't. Never mind, this never got stopped. But what you want to do is trade it so it got stop, 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 and one more stop, and you survive the rest of the curve. Or the other answer is if I take 3 stops in a row, I just stop trading it. But personally, I just leave it. I just leave it running. So see how we just did an impulse move and we exceeded the fractal to the left? This short always shows up, bam, bam, like that. You always want to turn that off on that impulse move off the bottom. You want to turn that off. It's usually accompanied by the wave, a big impulse move wave up, and you just want to turn it off. So at any rate, I'll keep highlighting this. I'll keep highlighting this today so that you can see that we're opening near the low of the session. So it's open drive lower, okay? And so let's just keep working on. I have both shorts and longs operating today, and if you ask me, yeah, I'm anxious. This is the first day I've run this algo with a true nasty gap down. You need to adjust your Globex low, by the way, obviously, to whatever this is right here. And my suggestion is you burn the first half hour unless you were uber aggressive. Don't take multiple stops, okay? This target right here is a huge options wall right here. We are likely to get a response in this area, let's say within 50 points of 2670, right? So it has room behind it. It can overshoot it, but there is a large put wall there, and they will usually trade against that. That's all I can tell you on that. And you can also see that while NQ is hitting new lows, ES is not hitting new lows. So you clearly have a I guess distraction, would that be the word, or you clearly have a divergence between the two there, right? Going into the open. And remember, this is a down bearish open within the context of a bull market, right? So bull markets can roll over, and we have had a huge run. I don't disagree with that. And stay on process. That's all I can suggest is stay on process, right? Be patient. You'll get setups today, right? But be patient. Where everything's below that 200 period moving average, usually the first rallies when you get the orange square or the yellow dot down or the blue square down, they usually get follow through to the downside, just like this, right? So yeah, I'm looking for those on both ES and NQ. And that'll be manually traded since I don't have that programmed yet. Any questions? I expect two-sided trade. Did that help, or was that confusing, or did it help? Guys? Anybody? Bueller? Okay, cool. And I forget on the econ if we have anything at 9 o'clock, so I'll look. business inventories, and then 9 o'clock ECB's Lane speaks, 9:15 ECB, 9:30 Collins, 12:15 Feds Williams, 3:05 Feds Goolsby. 13:05, sorry. That was not a very robust, well, I guess it's before the open still, but I was going to say, that's not a very robust run up off the bottom there, is it? And don't blow up on a Friday, guys. If anyone's like going to go on tilt, don't do it today. Right? Just not worth it. This rallied and NQ really didn't follow behind. Low, Globex low. Down 267 in NQ and 44 on ES. And obviously open drive lower conditions, right? So y'all can wait for an impulse move or supernova or any of that other stuff, but like really go through your plan and go what you can live with. I don't even have my finger on the mouse outside of what the algo will do to trade this, right? I'm not trying to guess the low, figure out the low. We're going right for that gamma zone at 27.11 and just below on ES at 50.28.75. And of course, my biggest anxiety is showing you, well, look, and that has just a disaster day. As a matter of fact, here, I'll try to, well, never mind, I'm not going to screw with that. I was going to put on the trade, but I'll just move it over and show you once it's running. Actually, let me stop this.